In today's weekly Forex forecast for the week ending October 18th, we are talking about the DXY, the EURUSD, the Pound USD, and also the Australian dollar. So starting here with the DXY, as you guys know, 102.60 was the key area that I've been watching now for weeks. In fact, ever since the market broke down back here during this consolidation, I was looking for, first of all, the range here between these two levels with 102 resistance, but also 102.60 specifically because that was the bottom of that 2023 channel that we've discussed. So going out here, you can see if we go all the way back here to 2023, you can see where we've got these highs up here. And if you draw a parallel level off of that one, then you've got these lows down here. And that is no coincidence because markets do love symmetry. So you can see here that we had a nice range that built up for over a year from the DXY, and it did break down back here. Okay, so 102.60 was the bottom of that ascending channel here. And so we did get a retest a few days ago. Now, the key here, and this is why I was telling VIP members that I would not be looking for shorts on a 102.60 retest, is first of all, we had a very aggressive rally into this area. So this is not something I want to short into. And furthermore, we did have the DXY breaking back above these range highs back here at 102. So like I've said recently, the only way that this right here became a short opportunity, in my opinion, would have been on a close back below here. If we had seen something like this with the DXY closing back down here, then that would open up, a dollar short for me, okay? But as long as the DXY was above this and pressuring this area, I was looking for a reclaim of 102.60, which we did get last week. So right now we do have several daily closes above here. We've also got a weekly close now above 102.60. So in my opinion, that is critical here. That is very important for the DXY because it does put the market back here within this range. Okay, so not only does it put the market back within this 2023 channel, but it also puts it above horizontal areas like this here, right around 102.60. So notice that going back here to this consolidation, back here in 2023, we've got this consolidation through here. We've got lows like this, highs through here, low here, and lows through here. So this right now, guys, is going to be critical support for the DXY. And I do not favor looking for US dollar shorts while above this. In fact, I like looking for US dollar longs. So this is going to flip to support. Eventually, we are going to see a retracement here, which we really haven't during this entire move up. So keep that in mind that eventually we are going to see some longs flushed here and the DXY pull back into value. But again, as long as the market's above that 102.60 area, I like the idea of looking for longs simply because this was a massive, in my opinion, a massive reclaim for the DXY last week. Now, as far as resistance areas, you can see we've got this high up here and also this low. So there is going to be some selling pressure through this region. However, the next big area here for the DXY are going to be these lows back here. So this area comes in up there around 104. So this is going to be the next critical resistance for the DXY. So obviously we've got some room to work with here if we do get a pullback into this area. So, potentially a pullback into this area and then a bounce from there that gives us a nice range to work with here for the DXY. So that's what I'm looking for, over the coming weeks. As long as this area is intact down here, then I am bullish on the US dollar. Of course, if we were to see the market closing back below this on the daily, then this up here would be a failed breakout and we could get that move lower down toward levels like 102. But as long as we're above here, guys, again, I do not like looking for dollar shorts. I like looking for US dollar longs toward areas like 104. So next up, we have the EURUSD, which, as you guys know, I have been rather bearish on this market ever since the fake out up here above the top of this channel. So even though this chart looks really messy and, technically back here, it was very messy. However, at the same time, it did hold up rather well here, technically speaking, because we had this channel that developed back here. Okay, this ascending channel, you can see we got the close above here. We got the breakout, the move higher. We also swept that late 2023 high that we've talked about. And then we had this move right here fail on this candle. Now we got a retest right through here. And this was actually a short that I mentioned on this candle right here through this region. And the target there was 110, which we did get. And from there, we can see that we got a lot of chop through here. However, notice that the market never closed back above the top of this channel. Okay, so very choppy back here in this area, very range bound. However, it did hold up, technically speaking. Now, this right here, this closed back below 111.10. This is what I talked about, where it was looking rather bearish back toward 110 because we did get the close back below this mid-range through here. All right, now we did get the break lower last week below this channel. So that means that right now the EURUSD is facing critical resistance up here at 110, but more specifically over here at 109.50, because you can see through here that we've got several highs back in this area. So we've got this high right here, we've got the closing price through here, and this low. So we've also got this low, and notice these two highs. Okay, so right now, this is going to be critical resistance for the EURUSD right around 109.50. And we do have support coming in down here at these lows right around 109. So a very range-bound market right now. I think if you're looking for shorts, just my opinion, but if we do get the DXY pulling back to test 102.60 as support, then we could get the market coming up here and taking out these highs and then turning lower from there. Okay, so I think if you're looking for shorts here, this is the area to do it, as long as the DXY is above 102.60. And of course, if we were to get a sustained break below here, okay, a sustained break below 109, then we are looking at areas like this down here, which is more of a minor pivot for the euro, but still significant, right around 108.40. And then we also have this trend line down here, which I think if we get the DXY up there toward 104, okay, so if that breakout on the DXY holds up, then we've got trend lines like this down here on the euro that could come into play. All right, so right around 108. So notice we have this low from right back here, and that could come into play here if the DXY tests 104, okay? So I am looking for lower here from the euro. However, keep in mind that if you are looking for shorts, this is just my opinion, not financial advice, but if you are looking for shorts here, I think you've got to be really careful with the timing, and you don't want to chase this into support. So you're looking for a move up toward, resistance levels, potentially sweeping some highs before we get lower down there toward levels like 108.40 and 108. Now, of course, if we see the EURUSD start to reclaim levels like 109.50 and the DXY falls below 102.60 on the daily chart, then that could signal a turn higher for the euro. So keep that in mind as well. You've got to consider invalidation levels whenever you're looking for any kind of trade in a market like this. So next up is the pound here, which I think is really clear on the weekly time frame. It has been also a very sideways market, a very messy market, like a lot of these major currency pairs. However, the weekly I think says it all. And this is what I talked about recently, where you can see that back here, ever since April, we did get a stair-step pattern here from the pound, where you can see on the weekly chart, the market never closed below highs like this back here. So we had the closing prices back here. It held up as support. We had this high up here. The market did come back and test that. However, clearly never closed below. We then had this high up here. And of course, we got the close below on this candle. So that right there was a change in trend. Okay, that right there, the close below 132, 132.50. This right here signaled a change in trend for the pound. And this is still what I'm going by, this week and really for the weeks to come, because something like this could take weeks or months to play out, where we get the move up here toward, potentially resistance, clear out some highs up here, and then we get that turn lower towards some of these lower levels over the coming weeks. Now, like I've said recently too, a fake out like this, a failed breakout to one side of a pattern, typically you get an extended move in the opposite direction. And when you're dealing with a channel like this right here, because that's all this is, these lows down here, if you draw a parallel level up here across these highs, this right here was a channel. And you can see where it served as support through here on this weekly candle. Okay, so if this is a failed breakout up here, which it looks like it is, then this could, over the coming weeks and months, target the opposite side of this pattern, which would be the lows down here, okay? So in my opinion, this is more of a longer term target for the pound, as long as it holds below areas like 132.50. All right, now before we move on, guys, I do want to mention that this video is sponsored by Prime XBT. If you want to trade Forex, crypto, commodities, indices, all in one place through a trusted broker, someone that I trust, be sure to click on the link in the description of this video. You can also find the link at the top of this video. And for a limited time, you will also get a welcome bonus. So be sure to sign up with Prime XBT if you want to use the broker that I trust and recommend. All right, so that's what I'm looking for here for the pound, guys. I mean, really just a very sideways market still. However, like I said, I do think that this right here, this failure to hold above these highs back here, this is a significant turning point for the pound within this uptrend. Okay, so, like I said with the euro, I think you've got to be careful here with timing. I don't like the idea of chasing a market lower like this, especially into support. So what I would be looking for is if the DXY tests 102.60 as new support, then we could get the move up here toward areas like this, potentially, clearing out some of these highs that have built up. And then you're looking for shorts from up here. Okay, so you always want a short high, long low. I know that sounds very basic, but it's amazing how many times people forget that. Okay, so that's what I'm looking at here for the pound. I do think, again, this right here was a turning point for the pound, but you've got to be careful with your timing, especially when you see a market just churning lower like this right here. Okay, FOMO can kick in, and this is when you need to be patient and wait for those opportunities. All right, so last up we have the Australian dollar, which if you saw the weekly forecast from about a week ago, a little over a week ago, we were talking about the short opportunity on this close back below this trend line that extends from those January 2024 highs. So you can see we've had two opportunities now from this, and this is my go-to setup in the Forex market where you get moves like this. In fact, this works in any market where you can see you get buy-side fakeouts like this where the market sweeps the highs here, okay, moves above a key level like this, and then closes back below. All right, so up here you had the close above, the close back below. This right here was a short down here toward these highs and these lows, which we clearly got. Now, this over here, same thing. We had the close below. However, we did not get a retest up here as new resistance. So this one was a little bit trickier to play. And to be honest with you, the odds of a retest up here are pretty slim now, as long as the DXY stays above 102.60. Because if the DXY is above 102.60, I do not think we're going to see the Australian dollar up here in this area before we get lower. So what I'm looking at now for a market like this is this consolidation right back here. So if we see the DXY stay above 102.60, okay, and a stronger dollar here over the coming weeks, then I'm looking at a move up here toward, these highs and potentially flushing these highs into some imbalances like this up here and this consolidation, okay? So this is what I'm looking at now for the Australian dollar. If we get a move up here to flush some of these highs, potentially a short there. Now, again, this hinges on the DXY staying above 102.60, okay? As long as that's the case, I like looking for shorts here. Now, the alternative to this is to wait for a sustained break below areas like this around 67, because we knew going into this that this area down here would be a critical support level for the Australian dollar. Now, the issue there is that if you're looking for shorts on a sustained break below here, then you're technically shorting low, which you don't want to do typically, okay? In my opinion, you always want to be looking for shorts higher up because that's going to offer the best risk reward. Okay, so again, looking at this consolidation back here, a lot of times areas like this will serve as not only resistance, but also potential magnets. And you've got highs back here like this that have built up. So potentially we get that move up here to sweep these highs and then we get lower from this market. But just keep in mind that 67 is going to be key support. It is going to take a sustained break below that to open up lows like this down here and potentially areas like 65.80. Subscribe to the channel and click the bell for notifications. Don't forget to join us in VIP, claim your 90% off lifetime access. See the link in the description of this video, or if you're on the website, click on that join VIP link. I will see you on the inside. Trade well out there, and I will talk to you again tomorrow.